Topic 1.5 Finance Manager. Meaning of the heading first. Finance manager equals a person who handles all financial activities in a company. She raises funds, invests wisely, manages risk, and gives advice to top management. Simply, this is the main brain behind all money matters in an organization. Let's now understand in simple words with full emojis. 1. Role of finance manager in a company. A finance manager is like the money captain of the company's ship. They are part of top management and help the company make smart money decisions. From raising funds to choosing investments to managing risk, they do everything related to finance. TA 1.5.1 functions role of finance manager in modern age. Let's break them down one by one with examples and emojis. 1. Raising funds of company finance. The finance manager's first job is to calculate how much money the company needs for short-term and long-term goals. They search for different ways to collect money, like taking loans, selling shares, or inviting investors. Then, they choose the best option with lowest cost and best terms. Example: imagine SBI Bank needs 500 crores to expand. The finance manager decides whether to raise this by issuing bonds, getting a loan, or selling equity shares. 2. Taking maximum benefits from leverage. Leverage means using borrowed money to increase profits. There are two types. Operating leverage equals using fixed assets efficiently. Financial leverage equals using debt to increase profit. Example: if a company earns 15% from operations, but pays only 8% interest on loans, it gains extra profit from leverage. Finance manager ensures this works safely. 3. International financial decisions. Finance managers must track global financial trends, like currency exchange rates, international interest rates, etc. They use financial instruments like currency swap, credit default swap, interest rate swap. Example: if an Indian company exports to the USA, a finance manager might use a currency swap to protect from dollar-rupee exchange loss. 4. Investment decisions, capital budgeting. The finance manager decides where to invest the company's money for the best return. Tools like net present value, NPV, are used to compare different projects. Example: company has 3 new project ideas. Finance manager calculates NPV for all. Project A equals 10 CR, B equals 12 CR, C equals 9 CR. He chooses Project B with highest NPV. 5. Risk management. Every business has risks, some visible like fire and some hidden like fraud. A finance manager must identify, reduce, and manage risks. They coordinate with insurance companies, rating agencies like CRISIL, Moody's. Example: a bank launches a new loan product. Finance manager studies loan default risk, market trends, and uses insurance and ratings to manage it. Key points to remember for exam. Finance manager is a key decision maker on all financial matters. Main roles: raise funds, use leverage, invest smartly, manage risks, and stay updated globally. Tools used: NPV, swaps, leverages, capital structure, etc. They must be efficient, updated, and advisory-minded. Interview real work connections. Bank PO interview group discussions. You may be asked, how would you manage financial risk in a branch? You can answer using risk management steps of a finance manager. As a future bank manager, you'll be taking decisions on loan approvals, investment plans, and risk evaluation, so this role connects directly. During internships or MBA placements, finance manager functions will be expected knowledge. A finance manager equals main person handling all money matters in a company. They raise funds, make smart investments, use leverage to grow profits, take global decisions, and manage risks. Their role is crucial in company success. Short motivation to continue reading. You're learning what leaders of tomorrow need to know. Keep going step by step. This chapter is building your financial brain muscle. One day, as a bank PO or manager, you'll make big decisions just like a finance manager. Keep reading. You're much closer to your goals than you think. Ready? What are responsibilities of a finance manager? Responsibilities simply means the important duties or work a finance manager has to do in an organization. These are the key areas where they take decisions to keep the business financially strong and successful. 1.5.2 Responsibilities of a finance manager. Let's break this into simple points with examples, emojis, and real-life use, determining financial needs. What it means. The finance manager checks how much money the company needs for two main things: fixed capital, like machines, buildings; working capital, day-to-day money for running business. Example: a bank needs less machinery than a car manufacturing company, so the car company's finance manager will estimate more money for machines. Key point to remember: if finance needs are not calculated properly, the business may either run out of money or waste money. Both are dangerous. Choosing sources of funds. What it means: once the money needed is known, the finance manager decides from where to get that money. Two main routes: equity, own money, like shares; debt, borrowed money, like bank loans. Example: to start a new bank branch, a finance manager may take part loan from a bank and part money by issuing shares to public. Key point: choosing the right mix of equity and debt is very important to avoid high costs or losing control. 3. Financial analysis and interpretation. What it means. The finance manager reads the company's financial statements and understands: is the company profitable? Can it pay short-term bills easily? Is it safe in long-term? They use financial ratios like current ratio, debt-equity ratio, net profit margin. Example: in a bank POPO job, you'll also check financial reports before approving a big loan. Key point: this helps in better planning and early warning if anything is wrong. For capital budgeting decisions. What it means. The finance manager uses logical tools to decide where to invest big money, like buying new machines. Tools used: NPV, net present value; IRR, internal rate of return; payback period. Example: if a bank is setting up a new ATM network, capital budgeting will be used to see if it will be profitable in the long run. Key point: helps to make wise long-term investments and avoid losses. Working capital management. What it means. Finance manager ensures the business has enough cash for everyday needs. Not too little, not too much. Includes managing cash, inventory, receivables. Example: if a bank branch doesn't have enough cash in ATM, it will affect customers. Too much cash lying idle, it could be invested better. Key point: right working capital ensures smooth daily operations and good profitability. 6. Dividend policy. What it means. Dividends equals profits shared with shareholders. The finance manager decides how much profit to give as dividend, how much to keep in company. Example: if a bank earns big profit, shareholders expect a good dividend. But if expansion is planned, profits may be saved. Key point: must balance shareholder happiness and future growth. Summary chart. Responsibilities of finance manager. Responsibility, simple meaning. Example, key learning. 1. Financial needs. How much money is needed? Car plant needs more fixed capital than a bank. Estimate right or risk failure. 2. Sources of funds. From where to raise money. Loans, equity for new ATM. Choose right mix. 3. Financial analysis, check profits, safety. Loan officer analyzing balance sheet. Plan actions early. 4. Capital budgeting. Decide on long-term investments. Opening 10 branches, avoid risky investments. 5. Working capital. Manage daily money, maintain ATM cash, ensure smooth daily ops. 6. Dividend policy. How much profit to share? Keep some, give some. Balance growth and rewards. Real-life use and interview help. In bank PO or manager roles, you'll evaluate financial needs of branches or departments. Decide loan amounts based on analysis. Discuss dividend trends during group discussions. Use capital budgeting knowledge in credit appraisal. You can talk about this in interviews as, I understand how finance managers make investment and funding decisions using tools like NPV, which is very important even in credit risk assessment in banking. Mini motivation to keep you going. You're not just studying for exams, you're building the brain of a future bank manager. Stay curious, stay focused, and remember, every small concept is a step toward your SBI PO badge or your dream corporate role. You've got this. Subject: Financial Management. Module 1, Introduction to Financial Management. Chapter 1.5, Finance Manager. Topic 1.5.3, Emerging Role of Finance Manager in India. What does emerging role mean? Emerging role means the new responsibilities, importance, and work style of the finance manager in modern times compared to the traditional or old days. It's about how the role is growing and changing to meet today's business and economic needs. Hutch 1.5.3, Emerging Role of Finance Manager in India. Let's understand this topic in a very easy, simple, and exciting way with full emojis and examples. 1. Finance manager is not just an accountant anymore. Old view. Finance manager was seen as just a person who keeps records or accounts. Now, she is a part of top management and helps make big business decisions. Example, earlier, a finance manager in a bank just prepared reports. Today, they help decide where to open new branches, how to reduce loan risks, or how to increase profits. Key point, now finance managers are leaders, not just number crunchers. 2. Role has moved beyond routine work. Now, finance managers are not just doing basic tasks like calculating profits, recording daily transactions. They are involved in policymaking, strategy planning, and company goals. Example, in a bank, the finance manager may now create a plan to expand digital banking by analyzing future trends. Key point, they now play a role in big decisions like CEOs and directors. 3. Finance manager equals key decision maker. In modern business, survival depends on quick and smart decisions. Finance managers are now predicting future problems, planning budgets, helping the company grow. Example, if RBI changes interest rates, finance managers in banks must quickly adjust the loan rates or investment plans. Key point, they are like the navigators of the company ship, guiding it safely. 4. Adapting to economic, political, and technological changes. Today's world is changing fast. New technology, new rules, global economy. Finance managers need to update knowledge regularly, understand the market, use modern tools. Example, in banks, they now use AI tools to track frauds or decide on loan approvals. Key point, they must be updated, smart, and ready for anything. 5. Value creator, not just money raiser. Earlier, the job was only to arrange funds. Now the role is creating value using those funds, making sure every rupee gives the best return. Example, if Luristed 1 crore is raised, finance manager ensures it is invested wisely for max benefit. Key point, they focus on wealth creation, not just money collection. 6. Using advanced tools and computers. Finance managers must learn and use financial software like Tally, SAP, Excel, data analysis tools, forecasting and budgeting software. Example, a finance officer in SBI might use software dashboards to monitor branch performance. Key point, tech skills are now mandatory for survival in finance roles. 7. Connecting with all departments. Now finance is not alone. It is connected with to budget ads, HR, to plan salary and hiring costs, production, to buy raw materials smartly. Example, in a bank, the finance team works with IT and operations to decide the ATM installation costs. Key point, finance is now a team player in the full business, not just its own corner. 8. Helps CEO and top management in decisions. Finance managers give reports and analysis to help the CEO take smart business calls, understand profits and losses, plan the company's future. Example, before opening 50 new SBI branches, the finance manager will present a report with cost, benefits, risks, break-even point. Key point, finance manager is the right hand of the CEO. Anesh summary table, emerging role of finance manager. Old role, new role. Just an accountant, strategic decision maker, routine tasks, top-level planning, only fundraising, creating value and profits. No tech used, uses financial software and tech, works alone, connects with all departments, limited influence, key person in business success. How will this help you in real life and banking career? In SBIPO interview, they might ask, how has the role of finance manager changed over time? You can answer confidently using this concept. In group discussions, you can speak on topics like use of technology in financial management or modern role of CFOs in Indian companies. In your internships or job, you'll be expected to understand how finance links with marketing, operations, IT, just like this topic shows. Even as a bank manager, you'll need to take financial decisions based on forecasts, trends, and planning, not just calculations. Mini motivation to keep you fired up. Shh, you're learning not just for exams, but for your future leadership journey in banking and finance. Every topic you master today brings you closer to the chair of assistant manager or even the CEO tomorrow. So stay strong, stay. Subject: Financial Management. Module 1, Introduction to Financial Management. Chapter 1.5, Finance Manager. Topic 1.5.4, Organization of Finance Function. Lash, what does Organization of Finance Function mean? This means how the finance-related tasks are structured and managed in a company. It shows who is responsible for what in the finance department and how these responsibilities are divided and coordinated. In simple terms, it's like the team structure of a cricket team. Who is the captain, CFO? Who is the bowler, accounts manager? Who is the fielder, finance manager? And what role each person plays to win the match, manage company finance. Hashosh Tasharak Shah 1.5.4, Organization of Finance Function. Now let's break this down in very simple points with emojis and real-life examples. 1. Board of Directors, BOCOOL's top decision makers. The board of directors is like the headmaster of a school. They are the topmost authority in the company and are finally responsible for all finance decisions. But do they handle daily work? No, they delegate the financial responsibilities to the CFO. Example, in SBI, the BOD decides overall strategy, like expanding in rural areas, but gives the financial planning work to the CFO. CFO, Chief Financial Officer, equals Finance Captain. The CFO is the main finance head of the company. She is part of top management team and handles important finance decisions like how to raise money, capital structure, should we merge with another company, should we buy another business, acquisition. Also, the CFO looks after day-to-day finance work like handling money, accounts, taxes, etc. Key point. The CFO is both a planner, long-term, and a manager, daily tasks. CFO's work is divided into two main parts. Let's see what the CFO handles under two categories. A. Director Finance, role. These are the strategic and external side of finance. 1. Cash management. Managing cash inflow and outflow to make sure company has enough cash daily. Example, in a bank, managing cash for ATMs daily. 2. Credit management. Deciding who can be given credit, delayed payment, and how much risk is okay. Example, deciding loan policies for small businesses. 3. Financial planning. Creating future money plans, income, expenses, investment. Example, planning yearly budget for a new bank branch. 4. Security flotation. Raising money by issuing shares or bonds. Example, SBI issuing new shares to raise 500 crores. 5. Capital expenditure management. Deciding where to invest big money, like buildings, branches, software, approving 10 crore for digital banking upgrade. B. Accounts manager, controller role. These are the internal and technical side of finance. 1. Financial accounting. Recording all financial transactions as per rules. Example, keeping records of all customer transactions in the bank. 2. Tax management. Making sure all taxes are paid correctly and on time. Example, calculating and paying GST or income tax for the company. 3. Internal audit, checking whether all departments are following rules and spending properly. Example, checking if a branch manager followed all procedures in approving a loan. Summary table, organization of finance function. Level, person, key role, topmost. Topmost, board of directors. Final finance responsibility, top management, CFO, finance policy plus daily work. Strategic finance, director. Planning, cash, credit, investment decisions. Operational finance, finance manager, controller. Accounting, tax, audit. How this helps you in real life and banking career. In SBIPO interview, they may ask, what is the role of a CFO? You can clearly explain with this structure. In group discussions, if the topic is importance of financial leadership in modern companies, you'll rock it with this topic. In your internship, if you join a bank or company, you'll see this structure live. Knowing this will help you impress your seniors. As a future bank manager, you'll have to coordinate with CFO, auditors, finance teams. This knowledge will make you ready. Mini motivation for you. You're not just learning finance. You're building the mind of a future manager, a smart banker, and a real decision maker. Every small topic you understand now becomes a step to your dream post, assistant manager, or even CEO. So stay focused. You're doing amazing, and your future is bright and bold. Send the next concept when you're ready. Subject, Financial Management. Module 1, Introduction to Financial Management. Chapter 1.5, Finance Manager. Topic, Director Finance, Roles and Responsibilities. What does Director Finance mean? The Director Finance is a senior finance professional under the CFO who handles the major financial decisions of a company. She takes care of future planning, investment, cash, credit, and fundraising. Think of them as the strategy expert of the finance department. Now let's understand their roles in simple words with clear points, examples, and emojis. 1. Finance manager, treasurer. They are key persons under the Director Finance. They look after daily and strategic financial activities like cash flow, credit control, financial planning, and fundraising. A. Cash management. This means managing daily cash inflows and outflows. The aim is to always keep enough money available for operations like salaries, bills, or purchases. Example, a bank needs to manage cash to refill ATMs every day. If cash is short, customers will be unhappy. B. Credit management. This means deciding how much credit, loan, or delayed payment the company will give to others, like customers or suppliers. Example, in banking, credit management involves checking if a customer is eligible for a loan and deciding their loan limit. C. Financial planning. It involves preparing plans for company income, spending, and investment in the short and long term. Example, planning a 5-year financial roadmap for expanding 50 new bank branches in rural India. D. Security flotation. This means raising money from the public or investors by selling company shares, bonds, etc. Example, if SBI needs 500 crores to open more branches, it may float issue bonds in the market. 2. Accounts manager, controller. They take care of internal records, compliance, and accuracy in finance. They make sure money is used properly and legally. A. Financial accounting. Recording all company transactions, expenses, income, assets, properly as per accounting rules. Example, a finance officer at HDFC must record every rupee spent on employee salaries. B. Tax management. Ensuring that correct taxes are calculated and paid on time to the government, like GST income tax. Example, SBI must file corporate tax returns correctly every year to avoid penalties. C. Internal audit. Checking if all departments are following finance rules and there is no misuse of funds. Example, an audit team may check whether loan approvals followed bank rules or not. 3. Capital expenditure management. This is about deciding where to invest large amounts of money in long-term assets like land, machinery, or technology. Example, ICICI Bank invests 100 crores to upgrade cybersecurity systems. This is a capital expenditure decision. Key points to remember. Director Finance focuses on big decisions in finance. Finance Manager handles cash, credit, and planning. Accounts Manager controls accounting, tax, and auditing. Capital expenditure is about long-term investment. Easy table for quick revision, category handled by work, cash, credit, planning, finance manager, and future planning. Accounts, tax, audit, accounts manager or controller, internal control and accuracy, investment in big assets, direct term spending decisions. Check out how this helps you in bank PO exams and career. In interviews, if they ask, "What does a finance manager do?" you can explain this structure confidently. In group discussions, if the topic is on financial discipline in organizations, you can shine with these points. As a bank PO or manager, you'll coordinate with finance teams, auditors, and planners. So this concept builds your practical foundation. Short example, bank style, you join as a probationary officer in SBI. You are assigned to open new digital kiosks in 20 villages. Who will you contact? Finance manager, to get the cash planning done. Controller, to ensure the funds are accounted. Director finance, to approve the full budget. Boom, you're already thinking like a future bank manager. Mini motivation for you. You're not just reading finance. You're training to lead finance in banks, corporates, and even your own venture one day. Step by step, concept by concept, you're getting closer to your bank PO dream and managerial goals. Keep going, champ. Your goals are big and so is your potential. Ready for the next topic? Send it now. Subject: Financial Management. Module 1, Introduction to Financial Management. Chapter 1.5, Finance Manager. Topic 1.5.4.1, Functions of CFO as a Treasurer. What does functions of treasurer mean? Functions means what the treasurer, a part of CFO team, actually does day to day. Treasurer equals finance officer who takes care of cash, credit, future money planning, and fundraising for the company. Think of treasurer as a person who keeps the company's wallet safe, plans its budget, manages borrowings, and handles investments. Now let's break it into 4 main functions with simple words, emojis, examples, and quick tips. HA1, Cash Management Functions. This means handling all cash-related activities of the company safely and smoothly. I, opening and operating bank accounts. Treasurer opens and manages company bank accounts to deposit cash and checks. Example, a bank manager opens new current accounts for each branch's operations. Task I, timely payment of client dues. Treasurer ensures all payments to suppliers, lenders, or clients are done on time. Example, if a vendor gave goods to HDFC Bank, the treasurer ensures payment is done by due date. Recording and accounting of cash deals. All cash transactions must be properly recorded and tracked. Example, a bank PO collects fees for a locker and updates it in the system. That's good cash accounting. IV, maintaining daily cash and bank balances. Treasurer checks daily balances to avoid shortage or extra idle cash. Example, every morning, SBI ensures ATMs and branches have enough cash planned by Treasury team. CHESH 2, credit management functions. This means managing who owes money to the company and making sure we get it back on time. I, recording payments from debtors. Whenever someone pays their dues, it should be recorded carefully. Example, if a customer repays a car loan EMI, the record should be immediately updated. I, handling discounts and early payments. Giving discounts to customers who pay early can help cash flow. Example, a company offers $500 off on loan processing fee if you pay in first 3 days. E. Managing collection process. Set a proper system to remind customers to pay. Example, bank sends SMS alerts to remind customers to repay EMI. That's part of credit collection. IV. Estimating default risk. Try to judge which customer might not pay back and reduce the risk. Example, before giving loans, banks check CIBIL score to avoid giving credit to risky people. 3. Financial planning functions. This means planning money flow, profits, investments, and borrowing in advance. I. Showing real profit loss status. Treasurer helps management know the true financial health of company. Example, if a bank earned 20 crores, treasurer gives report on how much is real profit after expenses. E. Listing borrowing sources. Make a list of who can give loans like banks, NBFCs, or issuing bonds. Example, planning whether to borrow from SBI or issue corporate bonds. E. Estimating cash inflows, outflows. Predict how much money is coming in or going out next month, year. Example, company estimates next quarter expenses and expected income from products. IV. Advising on dividend distribution. Should company give profit to shareholders? Treasurer gives smart suggestions. Example, if profit is low this year, treasurer may advise not to declare dividends. V. Making investment plans. Treasurer plans where to invest extra money, safely and wisely. Example, investing 50 lakhs in a short-term fixed deposit till it's needed. 4. Security flotation functions. This means raising money from outside, public, banks, investors, by issuing securities like shares or bonds. I. Advising what type of security to issue. Treasurer tells if company should take a loan or issue shares bonds. Example, need fast cash? He may suggest issuing commercial papers or corporate bonds. E. Preparing terms and managing trustees. Create rules for agents or trustees involved in the money-raising process. Example, if Axis Bank helps issue bonds, treasurer sets the terms with Axis Bank as trustee. Key points to remember. Treasurer equals finance person who manages cash, credit, planning, and funding. Cash management equals bank accounts, payments, balances. Credit management, recording payments, handling risk and collections. Financial planning, planning profits, investments, and cash flow. Security flotation, raising money through shares bonds. Bank PO interview GD connection. In SBI PO interviews, they may ask, what is the role of a treasurer? You can now explain all 4 parts easily. As a bank manager, you will interact with treasurers of companies who apply for loans or issue securities. In group discussions, topics like companies borrow from banks or issue bonds, now you can speak with confidence. Summary. Quick recap. Function. What it means. Example. Cash MGMT, handling daily money and bank ops, ATM refills, check deposits. Credit MGMT, getting back money from debtors, loan collections, CBIL checks. Financial planning, planning income, expenses, profits. Investment, dividend, loan planning. Security flotation, raising funds via shares, bonds, etc. Issuing SBI bonds to public. Short motivation. For you, my future banker, every concept you learn is a step closer to your officer badge. You're not just a student, you're preparing to lead in banks, ace your PO interviews, and manage crores in real life. Stay consistent, stay curious, and your dream of being a bank manager or finance leader will come true. Ready for next topic? Subject, Financial Management. Module 1, Introduction to Financial Management. Chapter 1.5, Finance Manager. Topic 1.5.4.2, Functions of CFO as a Controller. What does functions of controller mean? Functions means what the CFO, Chief Financial Officer, does when acting as a controller. Controller, financial watchdog of the company. Their job is to check, control, and report all money matters in the company to keep everything accurate, legal, and secure. Imagine the controller as the head accountant plus internal auditor, financial protector, all rolled into one. Now let's explain these functions one by one in a very simple way with emojis, examples, and memory tricks. 1. Controlling activities through accounting and costing. The CFO, as controller, helps monitor the business by using accounting rules, costing techniques, and audits. They prepare financial reports, check expenses, and suggest improvements. Example, in ICICI Bank, if one branch is spending too much on staff overtime, the controller will catch this in the cost reports and control it next month. 2. Particular control activities. Let's understand the specific day-to-day tasks of the controller. I. Maintaining and analyzing financial statements. The controller prepares and checks profit and loss, balance sheet, and cash flow statements. Example, the controller finds that expenses increased this quarter, alerts the management to take action. Managing and controlling inventory. Keeps track of stock like goods, raw materials, etc., and avoids waste or theft. Example, in a retail company, if 200 units are missing from inventory, the controller investigates. E. Recording all financial transactions. Ensures every cash in out like salary, purchases, and expenses is properly recorded. Example, when salary is paid to staff, it is updated in payroll account, handled by controller's team. IV. Securing company assets. Make sure company's physical and financial assets, like property, machines, money, are safe from fraud or misuse. Example, controller ensures that a bank locker system has proper security checks and records. V. Providing finance to the company, supports in funding operations, either from profits or external sources. Example, if a bank branch needs 10 lakhs to upgrade systems, controller ensures it's arranged and recorded. VI. Using statistical methods. Uses numbers, ratios, and trends to analyze and make better financial decisions. Example, controller compares expenses of last 4 quarters using bar graphs to find unnecessary costs. V. Conducting internal auditing. Regularly checks all financial records to find errors, fraud, or policy violations. Example, in SB, if a loan officer bypassed policy to approve a risky loan, the internal audit will catch it. Cash key points to remember. Controller equals CFO role focused on checking and controlling all financial processes. Involves accounting, cost control, financial reports, inventory, internal audits, etc. Their main goal is to ensure the company's money is safe, well-managed, and legal. Bank PO interview GD connection. In SBI PO interview, they might ask, what's the role of a controller in a company? You can confidently explain with examples. As a future bank officer, you will need to analyze balance sheets, check accounting reports, and avoid risky loans. Controller knowledge helps in that. In internships, if you're given audit or finance control tasks, this topic helps a lot. Summary table, quick revision. Function. Bank example. Controlling via costing and accounts. Tracks all financial moves, finds overspending in salary, financial reports maintenance, prepare and study P&L, balance sheet, etc. Analyzes quarterly performance. Inventory control, checks stock and goods, catches theft in warehouse, transaction recording, records salary, purchases, bills, payroll, check handling. Asset security, keeps money property safe, locker security in bank. Statistical tools, uses ratios, graphs, analysis, bar chart of costs for 4 quarters. Internal auditing, finds frauds or errors, investigates a wrongly approved risky loan. Mini motivation for you, future finance leader. Every line you read builds your financial brain muscles. You're not just reading a textbook, you're getting ready to sit in the chair of a bank officer, finance manager, or even CFO one day. Keep going, keep glowing. You're closer to success than you think.